What is going on happy Monday, December 4th? We are looking at the Russell 2000 because it seems like it's small cap season. We are looking at the Russell, which is up 0.87, so it's almost up 1% on the day, as we can see right now. And after a very strong finish to last week. But you look over at the Dow, which is currently down 0.16, call it flat. The S&P is down 0.73, and then the NASDAQ's down nearly 1.5%. So it's like, whoa. Clearly, we see a rotation into small caps, which have been certainly lagging. We've been talking about for a while. But you're seeing what looks to be a decent rotation into small caps as of right now. I'm even seeing much better small cap action in terms of momentum trading. Not that I'm necessarily trading momentum small caps, but swing trading. I have certainly seen. Like, for example, I'm actually about to get out of the rest of it right now as we speak, which I'm going to do. But WISA was a small cap that I had been swing trading. And it popped well over 100% this morning. And if you look at let's go to a 1 hour chart, you will see, this thing is done pretty good, right? So from where it was, let's call it 13 cents-ish, it spiked to 41 cents, which if you do the math, from 13 cents-ish to 41, that's over 200% spike in pre-market. Now, when I play these, I always have orders set at 50 and 100%, not for the entire position, but for chunks of my position. This way, if they were to hit in pre-market when I'm sleeping, cool, or in after hours, or when I'm just not paying attention. And I came at this with a much more laid back approach. Like I put some small caps in my Webull portfolio and I literally forgot about them. And I woke up today, I'm like, oh shit, we hit some profits. So I finishing this one, I'm going to get out of this one the last little bit, like literally right now. And that's it. So you're seeing better action there. With that said, there's probably more we can look into. So maybe in a future stream, maybe even today, we can look at some other ones because I'm only going to have one. I'm going to be down to like one small cap left in my in the arsenal. When I'm like, that's how the action is going to be. I kind of want to be here a bit more. But that's kind of the example. I mean, look at these charts. These are shit. These are shit companies. You don't want to hold them because they're going to probably drop offerings. They're going to do reverse stock splits. Like they spike once and you get out. We had that happen. I had that happen in one of mine already. It delisted or whatever. Like literally like 2 days after I entered it, lost 30%. But when you make 200%, now of course you don't make 200%. You're not, who's going to buy the bottom? Who's going to get the exact top, right? Who knows how much? Last year there was a couple that were like 600%. Did you get 600%? No, but you scale out along the way and you can get a lot more than 30% loss is what I'm saying. So that's what it's all about. And at the end of the day, small caps seem to be back, and not for good reason, but more so there's a lot of charts. Let me tell you, there's a lot of charts. Yeah, I just finally exited my last bit up like, I don't know, 50 something percent. I don't even know. But yeah, I only have one left. So a decent day there in the small cap account, that's for sure. But yeah, like, I mean, these are the types of moves that we're talking about. Like, are we trying to get this thing to go back to $1? No, you know what I mean? But you see this massive destruction, and you see the high volume, and there's this gives us a slight edge, and that this could probably pop soon. It had a little pop here, and it had a bigger pop here, right? So that's what it's all about, ladies and gents. So other than that, we'll probably come back to this in a bit, but small caps, look at individual ones maybe towards the end, but let's look at the overall picture here at the Russell and all that stuff. What's going on, Millen? What's going on, Flippa? No opportunities. Wanted to short gold. Yeah, that's the gold. We'll pull up the gold and silver moves. Got destroyed. They got destroyed. And that's funny what happened there too. And then, but the thing is, I think it was CMRA or something like that. Lost. It went literally delisted. So you're gonna have the delisters. You're gonna have those losses. But the one makes it all up and much more. We're literally in one of the plays. So, and there was another one last week or 2 weeks ago that popped. I think 30, 40, 50%, maybe more. That hit some take profits and then it fell back off and I just stopped out of the rest of it. So there's 2 winners, 1 loser. I have 1 more left. I took 4 positions on small caps, and then I'll probably look for other ones. not the priority of my focus, to be honest, because I've seen I have all seen much better results elsewhere and more consistent results elsewhere. But it's the time of year; it's worth a shot, I think, especially when some of these things are destroyed, and you're getting some relative strength in the Russell versus the S&Ps. It's like, okay, well, it's not a bad spot to be. So, you know what I did see today? Webull is coming to Canada. I believe I saw that today. Social media post from Webull. They're coming to Canada. They're going to bring their services to Canada very, very soon. So we'll see if that ends up panning out. I'm not sure exactly when, but I did see that post today. Okay, yeah. So let's talk gold and silver. I mean, holy shit. So I had to like double check like what the hell this was, and I just looked at this a couple hours ago. And I was like, is this real? Apparently it was. Like this upper wick on gold apparently was real, which is insane from like last night. So the session, I guess, starting last night, that's going to end in like a couple hours. And then it's going to start the next session, which will be the next daily candle on gold. That'll start tonight. But upper wick to 2145, give or take, 2147. On gold. Meanwhile, the prior all-time high was like 2081, so 2081. It like literally broke that by like 50, 60 bucks. More than that, $65 it broke it by. And then immediately smashes down. Now, that would not be the most bullish of candles, if you ask me. But would I short gold right now? Probably not. Personally, I mean, look at here's the daily chart. Like, I don't know. Who knows? Like, what the frig is going to happen here? Big picture, we even talked about the monthly time frames, the weekly time frames. They look pretty bullish to me. So, yes, while this is a nasty day in the grand scheme of a monthly chart, it's just some noise. You know, here's the monthly chart so far. It's only 4 days into the month, and you've got a big upper wick. Yeah, it doesn't look good, but it's just some noise. We could finish the month up here, and we'll look irrelevant. So there's no way to really know. But that does not look great. I'll tell you that. But it's funny how that kind of works. And it's also somewhat not surprising because, you're going to have reactions at massive levels. And I would consider this a massive level for gold because not only did you hit this area once, twice, 3 times. This is your literal 4th time approaching this level. So the move, you would think, could be pretty big. And if you happen to catch the move on the breakout, you would have been like, holy shit, I'm up huge right away within literally like minutes, and then immediately get smashed right back down. Now, if you use stop losses, who cares? It doesn't really matter. You just, okay, whatever. But if you jump down to let's narrow this into a 5-minute chart. So you open up trading, I guess, last night or whatever, and then, 5:15 p.m. So after 5 p.m. last night, Sunday night, gold opens up around, right around essentially its highs, like right around its all-time highs. It just, when it breaks the all-time high at 5:15 Central Time, the thing within 15 minutes, the thing rips 3.5% nearly. 15 minutes. Gold moves 3.5%. People have been waiting a long time for gold to move 3.5%. Now, of course, you got a big day. Now today it's down 2%. So you see how crazy volatile that is. So you got some reactions, that's for sure, on this bad boy. So I thought that was pretty incredible. Silver, because it's more volatile, had an upper wick, but not as insane. It tagged 25.90, and now it's down around 24.50. It's a big move, don't get me wrong, right? But on the grand scheme of silver's chart, kind of a similar look to gold, right? In terms of the size of this move. They can be back at highs in a couple of days for all we know. But no, it's not super surprising, the move. I think that the way we got there is more surprising and a little more wonky. But if you look at the dollar, the dollar technically, is trying to build some sort of base and bottom out here to a degree. I don't know if it'll hold, but it's trying to do something right here at this, 102.50 area on DXY. That thing bounced the past couple of days, really, from last week into the weekend, really. That did bounce, and so I was kind of like, gold and silver are pretty strong, despite the dollar. Now, of course, dollar's generally speaking trending down, right? But despite the dollar looking decently strong off the bottom, putting some nice days in, gold and silver were pretty strong, so I was like, it's kind of interesting that they're moving nicely. And then you got the move to those highs and then hammer down, which makes a little more sense. I guess. But like we always say, the market doesn't have to make sense. Who cares? No one cares. But the market doesn't care about our opinions, what we think should happen and what makes sense to happen. But it's pretty incredible moves. So Labo 87, market open for small profit. Downside risk. Yeah, no, the downside risk from here is definitely larger. I still have some. I'll go to XBI to look at the chart there because now Labu is like 80, whatever, 80 something bucks. I mean, this is a big move back up. If you happen to have purchased it anytime, under 70, you're looking great. You're up $9, which is pretty good. Now, to me, we are effectively returning to the mean. I mean, I'm getting close. I technically had those two positions that now got converted. So when you have, I'll pull up the portfolio. When you have a covered call sold on an ETF that then has a split like that, or a reverse split, I guess. So now I only technically have 10 shares of Labu. I don't know, what did I have? Whatever the split was. I had a lot. And now I have 10 shares. I had 200 shares. So it was a 1 for 20? Is that right? Is that how it works? So 1 for 20? Or 20 shares became 1 share, right? I guess. So I now have 10 shares because I had 200 shares. Okay, that makes sense. I now have 10 shares of it down here. And because I had sold covered calls, now it turns to LABU1 and LABU1 is what they're called. I don't really know, to be honest with you. Like, I looked it up. I didn't have to do anything. And if they expire worthless, is kind of what it is. I guess they can get called away from me. The reality is that I think we still need to push a little bit higher. They expire next Friday. So we'll see what happens. And then ideally they expire worthless. And then I'll just sell my Labu soon. It's kind of the look. And not a bad time to even start thinking about that now, if you ask me. But because we are getting close to this pretty big volume node in the low 80s, which, it's going to be a spot to watch. And it's very similar to the Jets ETF play. Here's the Jets ETF. I mean, another massive move on Jets. I honestly, I don't even follow what the hell is going on. I have no idea. Like, I literally don't know. It doesn't matter to me. I don't really care what's happening in the airline sector. I guess airlines are doing good. Do I care why? Not really, because the chart was all that really mattered to me. But I have an average on Jets, which is nuts. I was talking about this I mentioned this in the Discord this morning. I was like, I'm up 20% on the position. Plus I've been selling covered calls in 1 month from when I bought it. That's sick. That's a sick move. So yeah, you get up here, let's take it off. Now, what I decided to do today, because I had a covered call that expired on last Friday, which went worthless. So I sold another one, and I went and was like, perfect day, perfect situation. Jets gapping up, it's up 3%. Perfect. Like, you couldn't have asked for a better situation to sell a covered call. And that's when I was like, okay, great. So I went out to the 15th of December and I sold a Jets 1850 call. I thought, I could sell a 19, but that's going to still require a pretty big move. 1850 is like much more doable. I'm like, okay, at this point in time, I'd rather sell closer to the money because, okay, it's time. Time is almost, in my view, time is up. Like, this position has served its purpose. Can Jets go to 20 plus? Sure. Do I care? No, I'll have my exposure to the S&P. And if the Jets goes 20 plus, I'm sure the S&P will do fine. So that's all I really care about. So I sold this for approximately 10 cents. So I got paid $10, and now it's worth 14. So technically it's gone up since then. I don't care. I will not be rolling it. I will let it take me out. But we still need to get above 1850 for it to do so. So it's got about a weekend. It's got, till next Friday to do so. It's got plenty of time. But yeah, so it just looks like that's going to get taken out. Hopefully, if not, I'll sell another one and I'll keep selling them around that same spot. So I did that today, and I also sold an ARK 54. Like, that's pretty high up there, because that would be ARK 54 would be ARK breaking the top of its range of recent months and in the past years, right? 2 years or so, right? Let's check it out. Yeah, ARK hasn't gone above, well, the highs that we have here from this year were 51-ish. The highs of August of 2022, that bounce off that low was just shy of 54. So 54 would be a complete break of the range from the past year and a half, almost 2 years of trading, which is pretty remarkable. So that's why I felt pretty good about that. Like, hey, if we get up there, I'm happy to sell it anyway, because I'd be up massive on ARK at that point anyway in a very short period of time. And we'd be kind of looking pretty overextended, right? So that's kind of the nature of what I want to do. So I sold this for 16 cents. It's currently worth 15 cents, right where I kind of sold it, pretty much. But yeah, I sold this today. At the 54 strike. By the way, ARK's at 48.60. It could get there in a week and a half, I guess, by next Friday. So it's like almost 2 weeks. This full week and then next full week. Could certainly get there, but I mean, that would be a pretty big move, and I would take that at that point. So we'll see what happens. Yeah, that's all I can say. So I thought two good opportunities there. And then I sold a BITO covered call as well. So I did 3 things in this portfolio today. BITO, I sold a 23 strike covered call. This is out again to next week. So it's the monthly expiration. 12/15 is the expiration. I sold this for 24 cents. I got paid $24. It's currently worth 24, so it hasn't moved. Or I guess it has moved, but it's the same price that I sold it at. And this, again, is 23 on BITO. BITO, drum roll, broke to the upside because Bitcoin broke out to its upside. This is, I think I'm getting paid a dividend, right? Ex-dividend date was on Friday, which is cool. And we get paid this Friday. We're going to get paid at almost 13 cents. Is that decent? Yeah, it's not bad. Yeah, it's not bad. It's more than last month. Well, it's actually just under last month. It's more than the prior few months, whatever. Either way, going to get paid a decent dividend. And I sold the 23 strike, which means it has to get to here, which I'm calculating if it gets 23 would put you pretty much at my Bitcoin area of interest / like target, if you want to call it a target, which is like up around 46 to 47,000. If Bitcoin gets there, I got no interest in holding a long trade beyond that. At that point, it would be like, okay, let it do its thing, and maybe it goes a lot more. I have a little bit of Bitcoin that I'm exposed to anyway in my portfolio, so I'll let it just do its thing. But yeah, I need to get out of this because I was in this from, I don't even know. Like this is, I'm up too much on it, so I got to get out of it. I bought it at I have an average at 14.69, 41%. I bought it like not many months ago, but a couple months ago, I believe. So plus I've been selling covered calls, so the return on this is probably like 50-ish%. And if it gets to that target, we'd be probably looking at like 60-ish%, which is nuts. So that's, just take that. Again, it's kind of like take the gains on the higher risk stuff and then, just consolidate down to your total market exposure, lower risk dividend stuff. And that's it. I mean, there's not, until stuff happens, it's kind of the strategy. So that's what I did today. Great news for all Canadians. Yeah, hopefully Bitcoin or Webull ends up being nice. Moo trade 0 now. Webull, I think that's a good mix. Webull, I like the most out of all those. I've used trade 0 very briefly, so I can't speak a ton on them. But I would still think Webull is pretty straightforward, pretty easy. It's solid. Gold futures and adjusted contract. It was at resistance. Okay. But for now, we only have cash accounts. Margin sold a covered call on Palantir for $21.50 December 8th when it was $21.70. Nice. That's a juicy premium there. How is Palantir doing? Oh, I got hit pretty hard. Yeah, I mean, that's just like the thing with these, and it still kind of feels that same way with a lot of these like risk on stocks. Like, yes, while they have been doing well, big picture, and like they're trending higher, and that's where they're seeing some strength. I mean, we can see a day or two, it just like they come crashing down fast, and it's like look out below, and they can get hit, and then they can be right back up like the next day. It's just kind of the nature of how they trade, which is, I think we've all seen it. It's been good because we've gotten a good picture into how quick things move. So it gives you better perspective for future bull bear markets, right? Like what to think about or what to what to consider and how to potentially play it in your own portfolio in your own way. GameStop, by the way, continues to push up. It's actually going to make a move up over 17. I'm actually pumped for that. Not that I'm looking to go in GameStop, but it's a great sign for risk on stocks and people getting a little more, interested, I guess. The thing is, they do have earnings on Wednesday, so that can come crashing and burning right back down. If it does, then there's maybe short opportunities there on the backside of that, which is great. I still think GameStop probably bleeds itself back out sub 10. It got down to sub 12. It's probably going to head sub 10 eventually. Who knows when? It could be in 2 years. It could be in 6 months. It could be in 3 months. I don't know. Maybe they do some nasty splits. They do some more dilution like AMC. I don't know. AMC is a piece of crap. I mean, look at that stock. I mean, how they absolutely annihilated shareholders on that thing. Not surprised. They kind of had to do what they had to do, but that didn't just hit a new low a couple of days ago. Now it's bouncing off of its bottom, similar to GameStop, I guess. But I mean, I wouldn't be surprised if at some point, you get some move like that on GameStop. Who knows when? It's not easy to predict. Comes down to the management, I guess, at the end of the day. Did it right 3 times. That's 4 months. Nice. And that's why we like covered calls, because, especially when things are good, because like they're not going to stay good forever, as we know. And so you're really kind of using that to almost hedge your backside for when things are bad. And it's like, okay, if the market drops and my positions drop, well, I sold these covered calls that are now going to go worthless. I'm going to collect all that premium, which I wouldn't have had if I didn't sell covered calls. Not that you can't beat, you can beat them. There's other ways to make money. And then there's downsides of it because it could cap your gains at times. But I like Affirm. Absolutely nuts. This thing's a beast. A beast. It's got to stop. It's not got to stop. It's probably going to, it's had a massive move. Okay, let's adjust this chart. Let's zoom out. Yeah, you got a couple key spots coming up on Affirm. One, $40, $41. And then the next would be up here at 51. So 2 next like key spots on Affirm, 41 and 51. You can even call it 40 and 50, roughly, just give or take a couple of bucks. That's an area. So we're getting very, very close to that. Now, is it something that I would say short it? I know, because personally, I wouldn't want to short something that's been this strong and has the squeeze potential and all that. It's been trending higher. You're uptrending the past couple of months, or more than the past couple of months. But this is it's up there. It's a way overextended. Had a great breakout over this 27 level, and then it popped off and went now almost to 40, which is an incredible move. But personally, I'm not a fan of touching it because it's made a massive move. If it pulls back a bit and builds a higher low, okay, maybe there's a potential to buy for someone, but that's probably not going to be me anyway. But that's my view of it. So we'll see what happens. Upstart was the one that I was looking at. Upstart and Affirm had traded pretty close together. They were 2 of my favorite mid caps, if you want to call them that, I guess, to play off of movements. This would be a better risk reward to me than Upstart, but had earnings gap down twice. So I don't know. But if the market really rips for it and we go we're really risk on for a while, I don't see why Upstart can't get back to the highs that we saw back in the summer, which is about 100% from here still, which is insane. Absolutely insane. It just take its time, maybe. You even kind of have almost a look at a inverse Head and Shoulders if you really want to get, cute. That's your Head and Shoulders. So your areas to risk off of would really be just like these lows. Like I wouldn't want to hold that thing below these lows. That is for sure. It came back down, but it's up a lot too the past couple of days. Massive move on Friday, big move again today. Oil's down 1.5%. That was interesting too. We were talking about oil's chart last week, and we're like, I don't like the look of it. It doesn't look great. And it is down again today, but not a ton. 1.5%. It's not bad. But when I zoom out on the oil picture, it's just very difficult for me to just get interested in it when I zoom out, because I don't know, you're still just in a weird spot. But this big upper wick that we had on Thursday, I believe, did not look good, and now it sent it to the downside, so I'm not a huge fan of what happened there. And I was thinking the way to play that could be maybe a short on ExxonMobil or something like that, which does, if oil has a 3, 4, or 5% down day coming at some point, if it does, the spot to be would be here, because this is a nice, just coiled consolidation for a while in the downtrend. You have a look for a freaking short and a half. I would say down into the mid 90s looks really juicy, but it's just the key. This area has been an interest. It was like every time it gets here, it bounces, and then you zoom back to the left. Every time it gets around this $100 level, it's bounce. Now, eventually, it's not going to. But the problem is that you just need a much clearer look on oil to be headed down for that to be the case. And so I don't know. I mean, you kind of had that fake out almost back in here. Look at this move where Exxon was down in May and June and into July. It broke down in July, fell for like 2 days, and then it snapped right back and then went to a new high a few months later into September. So that's the only concern. Now, again, with the stop loss and stuff in play, like it's not a terrible risk reward because of the potential. Like it could really drop hard if it does go. But I would be probably looking for a day where oil's looking nasty, and then maybe there's a day trade in there or something like that is more of what I would be thinking. PFE might be a value play and getting the diet pill price. Really? Let's see. I have no idea with what's going on there in terms of news. But you look at the weekly. Let's go to the weekly time frame. You got to think about. I mean, I don't know what the valuation stuff. That's not my, strong suit by any means. But it kind of looks almost like that Jets chart we were looking at a couple weeks back. We're just getting destroyed for a while. And the thing is, it's not like Pfizer. Like if you look at mRNA, different story. But it's not like Pfizer is just the shots. It's got a lot of other offshoots, which probably make a lot more money than that stuff nowadays. And the thing is, like, it did do well during the pandemic. Don't get me wrong. It had a move from, the mid 30s, low 30s, pandemic lows, subs in the upper 20s to 60 plus. So it went like 100%, right? Now, a lot of things went way higher, and mRNA went way, way higher than 100%. But if you look back to where it was trading prior to the pandemic and stuff, like you're looking back at like 2013 levels right now. Like it was trading at these prices in 2013. So from a chart value perspective, I think that's a way to phrase it. A chart value. I'm not talking about what the actual value of the company is because that's not me. I don't care. But from a chart value, you look at this and say, hey, this is a pretty big company. As long as they don't fuck it up, they're pretty cheap relative to the past decade. Maybe there's the risk is probably not super large for this as a potential buy. I mean, that's what I would think. So you're almost down to the pandemic lows too. So it's interesting. Now, of course, you look at this chart and you say, okay, from volume, let's zoom out big. It had a very great, the 90s were great for it. And then it shit the bed for about 10 years. And then it's had a nice decade and a half run, and now it's coming back down. If you got a big time horizon, cool. But there seems to be like other ETFs, I'd say, just seem more attractive than this, than an individual stock like that. But individual stocks, as we know, can provide bigger returns. Oil's overall bearish. Manufacturing been declining in the U.S., China. Oh yeah, I OPEC meeting did not go instill confidence. I would agree. That chart does not look good. It's difficult for me to say that I like the look of the short just based off of where it's been. So I'm not going to play it, but if I had to play it, I would definitely be short, not long. With risk probably above the highs of last week, which is around 79-ish, which is a big risk. It's a big area. But if I had to be like swing trade, idea, it would be kind of like this would be my risk. And then a 1-to-1 ratio would be down around 6. It's down near the lows, by the way. That's why it's tough for me to be like, eh. And you could short it and have, stops over like maybe like 76 or 77, maybe, and keeps it a little bit tighter. But that's kind of back into the jumbled mess of consolidation. So that's just why it's like a little bit more like, eh. But you look at that ExxonMobil chart, if oil breaks down, any weakness in the market as well, oh my. And this thing is going to get, I would think it could drop a couple bucks in a day like that. No problem. If that is what occurs. If oil keeps going down, market is weak at all, any pullback, any of that, I mean, you're probably mid-90s, like in a second. So we'll see. That's what I'll watch, and I have alerts set on it in case it does do that, but we'll see. Same with CVX. I just like Exxon looks a little weaker than CVX, but CVX you could make the argument for a pretty big bear flag setting up right now. If it breaks back under 140, boom, pretty big move down potentially into the 130s, stuff like that. Those charts look a little more attractive to me than the oil chart. And hey, that all could kind of match up well, because if the overall market is overextended and it has a pullback for a couple of days or weeks, and oil breaks down a little bit more, there's your secondary kind of confirmation to help bring these stocks down further. Diet pill stocks, LLY and ALT. How are they doing? Eli Lilly, right? LLY, Eli Lilly, yeah. Not bad. It's done very, very well over the past year. And then Altimmune. This is getting more of that spike and pump. If you will right now, what is this market share, or what's the market cap? 250 million. It's a pretty small market cap. Like the idea, short, not going to play it as well. Maybe I might let it go down to, yeah. We'll see how it reacts there. We'll see if it gets down there. I think that's probably where it ends up in bottom of the range soon. But just saying, I think is not necessarily, as we know, the best way to approach the market. Yeah, nat gas is getting nailed too. Yeah, it's been getting hit pretty hard lately, at least. So let's see. Let's jump back to BTC. That thing looks strong. I locked some of my swing in on Bitcoin on my prop account. I have, let's see what I have left. I had a really good trade on the NASDAQ today, which the trade recap will come out in like 30 minutes. Yeah, the Bitcoin trade, I'm out. I sold 40% of it. I'll probably sell, if it gets over 42K here tonight or something like that, I'll sell the next piece and be half out. I'm kind of selling in tenths, a little piece at a time. It's been how I've been going about it. Until it gets to the target, if it ever gets there. But I moved my stop to break even, and I'm just trimming. Not going to just hold the entire position until the target. Although it would be sick if I did and just woke up or if Bitcoin had a really big pump, kind of like the pumps. Now this is a big move here, but kind of like the move we had here in one day, where it went from under 30K to 35K in one day. Like if it made that type of move, it's obviously a $5,000 move, but 5,000 in terms of a percentage is much different now versus before. So that was about a 16-17% move back then when Bitcoin did that. If Bitcoin was going to go 16% move from here, let's just say, that would be up to 48.7. So that would be a big move. It would be about a $7,000 move versus a $5,000 move. So that's what the percentages tell you now, which is kind of cool. That will go down. I'll start nibbling ETFs under 70. Yes, I mean, unless you have a massive global recession, it's probably not a terrible time to do it. And then I say that because, I mean, who knows, right? You could, I guess in theory, you could have the bear scenario for oil to keep going down would be massive global recession and massive concerns there. And it's kind of like, who knows, right? It's one of those things. It's like, can you really invest like that? No. But if it did happen, I guess there is a risk for that based on the macroeconomic situation. I guess there's a risk. So if it did happen, make sure you have cash to be buying when it goes lower, if that's the case. Don't want to talk about natural gas. I know. I took plenty of losses on Boyle, and I have let it go at separate ways. I don't know if I'll ever be back to it. Maybe one day, but I have let it go at separate ways, at least for now. Because, oh, she did me dirty. That's all I gotta say. So IWM pushing up near high of day now. Look at that. Look at that. Yeah, it just made a new high of the day. So looks pretty strong if you ask me for now. I mean, strength in small caps, that is for sure. Going to have to jump back to that small cap list and probably go through it again. I have how many stocks in there? 20. I only got 27. We can rip these pretty quick. So WISA is up there. Obviously the thing is up, made a big move today. Let's go to some of these daily charts and see if there's anything that we can delete. So that had a big move. I can probably delete it. I'll leave it for now in case it comes, just leave it for now. But I'll be deleting it soon, likely. AY, because these are generally not stocks you want to come back a second time. It's hit it and quit it. AYRO, maybe there's something there. It's a lot of action. Not as clean of a move like set up as WISA. Let's rip through these bad boys. AC had a pop right there on ACHL. See how that went from 360s all the way to almost 6. So it was a decent pop. That's probably like 50 something percent, right? Yeah, 55%. Not bad. Could be worse, right? So that one could be good. FNCH could be an interesting one because if it comes right back into lows, because you're seeing some perk in volume. This move by itself was a perk in volume, but if it drills right back down to lows, okay, maybe there's something to be said there. And really, this is not like a continuous move. This has been, some volume's been coming in, but nothing crazy. It almost kind of just seems like someone's been trying to load this thing up slowly but surely. So that's not a bad looking chart. If it comes back down to lows and dare we say breaks a new low, like down in here, okay, we might have to get a little interested. Just gonna rip through some of these quick. IGC could be good, but yeah. Yeah, I actually want to see the same charts that I know have been working well. That's all I'm looking for. It's just a chart look. That's really what it is. Let's see what Grom looks like. Yeah, Grom could be a candidate if it gets some better volume in the coming days and weeks. Not really seeing a ton. Let's see if I get this out of the frame. Yeah, there's some on Wednesday at the 22nd, but overall, nothing insane. Something to be had, though, I think, on that. Could be a good chart look. That's closer to the same looks that we've been getting. LGMK was the one, I believe. Yeah, I already sold that. So it popped. I sold a good chunk, and then it came back down. I stopped out as it fell back down below the entry. But now it's coming back into potentially a spot because they did an offering or something. They had dilution, so that's why. Maybe it's worth it again, but again, after the dilution, you're probably going to have them do it again. It's just the name of the game with these things. Like, they're going to spike them, get some interest, and then immediately dump on your face because they're all in trouble. They're going to go bankrupt, so they need to dilute. They need to do offerings and stuff. DCFC, I don't know. This has been a lot of volume, relatively speaking, but it's been getting a lot more as of late, and it's down in the price range that has kind of been working pretty well right now, so I don't think that's a bad look. IPSC, it's popping a little bit today. Rev B, PIK, I thought went pretty... What's PIK? Yeah, could be interesting. Playboy up 13% today. Is that chart going to be worthwhile, or else going to be way out of... Just coming back off that, I think I'm going to delete this one off my list. I think it's a pretty high float, relatively speaking, too. Well, 48 million float's not bad, but there's better ones out there. Delete that from the list. It made a nice pop. VISL, $4. Remember this one back in the day? Well, that made a big move off of its low. Nope, not touching that. NUWE, a couple more to go. Could be good. I had a nice pump. This, if it goes to new lows, could be good. There's a couple in here that have caught my eye a little bit. AGRI, look at that, how it just popped this thing. And by the way, look at this move on AGRI, right? From 82 cents to 260, went 200+%, and now it's back at new lows. So could be back to scoop up again at new lows, but again, it might just dribble out for a while. But again, that's why you hit it and quit it. You get a move like that, anything over 50%. If you got anything over 50%, dude, and you're still in it, and it starts falling back on you, you cannot be pissed that if you end up losing on that, because you had gains to take in small cap land. But who knows? We'll see if these things have a better move into December and then January. But after January, just seasonality wise, I would be pretty cautious. Not to mention we'll see what happens, what's going on in the overall market at that time too. But you know, I got to be careful. AQB, this thing, look at this thing. Look at the volume. Look at the volume since the split here back on the 17th or 16th, whatever the date was. It got hit pretty hard. They dropped it down to 150, and now it's back to 250, and it's making a big move. I'm not going to play it because it's already up big, so I'm going to get it off my list, but that's kind of an example. So it's good stuff. When you see it kind of working, I like it. JVA, NRSN, up 15% today. Holy shit. There you go. I mean, that's an example right there, guys. I mean, what do we see? The thing comes down, it trickles down, has a couple big volume spikes, goes to new lows, 40 cents to 150 now. Look at that. 275%. I'm going to delete that off my list because, again, it's already gone, so I don't touch them that high, but boom. Metamaterials. That's a piece of shit company. Down 30% today. That's great. GMBL at 8. Is that at 1 cent? 2 cents? Holy shit. I don't know what's going on here, but they got volume coming in at least. And then AULT. This is the one that has a very similar look to WISA that I am currently in. It's the only one that I've got left just because the chart look is there. So that's really it. So, yep, small caps, there's deleted some, cleaned the list up a little bit. But, yeah, I mean, I like the looks that you got on a couple names. And I like the market in general is decent for small caps right now. Let's check out the 10-year. The 10-year was up a bit more. It's coming back a little bit. So just doing its thing. Nothing crazy there. The dollar was up more. Now it's down. Well, it's up still. Not up as much, but they're up. Jobs report Friday. Tax loss harvest. It's not a bad thing, especially if you've got bags to sell, because this is the time of year to do it if you've got other gains that you're going to have to write off against. And that's a pain in the ass I got to be on top of, because actually no, because I had taken some pretty big losses. What do you can like carry over a couple $1,000s a year in losses, right? What's like the rule? So after like last year or the year prior, I technically can write off $3,000 in losses, I believe, against my gains. So that'll be nice. I don't know if I am not a tax guy, so I don't know, but I believe. So I'll have that at least this year because I got good gains this year to be at least writing off something. That's next week. Next week is CPI. I was like, whoa, that's this week? Holy shit. That's next week. I'll go out with a bang there. And then, yeah, nothing crazy though. Nothing insane this week. Unemployment rate and stuff on Friday. Cool. Jobless claims Thursday. Yeah, some market stuff, but nothing crazy. And then CPI is coming out next week and all that. Powell press conference, FOMC rate decision on the day of PPI. Next week is going to go out. We're going to go out with a bang. That's for sure. And then I'm moving on Friday, so I probably won't be able to. Well, I'm not going to be streaming on Friday. So I'll be here. Well, it'll be Wednesday. Will be probably the last stream until like the next week. Until you get out to like December 18th, whatever that is. And it's almost Christmas time at that point. Which when there's a week, there's a full week before the holiday. There's a full week before Christmas, right? Because Christmas is on a Monday. So if the 18th is a Monday, yeah, I think, I don't know if the number's right. I think you have a full week. And then there's Christmas on Monday, which the market's closed, I assume. Let's look at the calendar. Stock market. Holidays. Let's see. So, Monday the 25th is Christmas Day. The market's closed, but I assume we're up the next day. So the market will be open Tuesday through Friday of that Christmas week. Curious how much. That's generally a lower volume week. Curious how much that. Well, I guess given that Christmas is on a Monday, it kind of makes it interesting for like the rest of the week, because it's like, okay, the holiday is like more like a 3-4 day weekend type of deal, and then it's like, okay, maybe the market is fine. It's not like Christmas is on like a Wednesday, which kind of like a couple days, then you get the holiday, and then the next couple days kind of in the middle. It's kind of more like it's the Monday, and then after that it's over, and then technically New Year's, but no holidays, because New Year's, well, is it? New Year's Day, they observe New Year's Day on this this year. They observed that on Monday, well, on the 2nd, which was a Monday. So I assume they're going to do the same. Well, no, they'll just observe New Year's Day on the actual day. So I assume you'll have, I mean, we can actually check, but I assume that Monday is closed. Yes, so Monday, January 1st. So yes. So you have a 3-day weekend going into Christmas, and then, which is a Monday, and then you go 4 days that next week, and then you go 3-day weekend again, and then you go 4 days the week after that, which I think is nicer versus having the holiday in the middle of a week and having like a weird, like 1 day here, 2 days. I like that. I like that way it lines up. I like it. So that'll be good. But with that said, we finished the day. I'll pull up FinViz and finish it up here on FinViz. Dow finishes just almost flat, slightly red. NASDAQ finishes down 0.84, S&P down 0.54. So come back at the end of the day. The Russell up 1%. The Russell just crushed it. So clear strength in the Russell. Small cap season seems to be upon us. Seasonality-wise, we see a strong December, but usually it's the second half of the month that's actually the strongest. So as we get into post-CPI, from CPI next week on is the seasonally the strongest time of year. So if you get a good reaction on CPI and you have positive seasonality, you could have that recipe for the ripper into end of year. If that's going to be the case, I really hope you pull back a little bit now for that setup, but anything can happen. Anything can happen. So we'll see if it all happens. We'll see what happens. With that said, I'm going to wrap things up. Bengals at Jags tonight. Yeah, the Eagles, the thing with the Eagles yesterday, that was it. They almost, I think, needed it because still got the best record in the league, but they've been playing a pretty tough schedule. The Niners are good. The Niners, I think, are the best team in the NFL right now. Right now. The NFL is up and down, though. Who knows? You prefer to peak at the end of the year, which the Niners, there's still a lot of games left. Decent time to be starting to put things together and be looking like they're peaking. I don't know if they are. We'll see if they stumble, here or there. But the Eagles, realistically, their defense is not that good, in my opinion. As much as everyone talks about the line, all that stuff, the defense is not that good. So I think they needed a little wake-up call. The offense can play and can hang. As long as the defense pulls, you get a couple stops a game. Maybe a turnover if you're lucky, but a couple big plays, a couple stops. It's all you need with a solid offense. If that's the combo, you're good. But the problem was they didn't run the ball at all yesterday because they knew. It's like, hey, if we start running the ball, which in a perfect world you would want to do to slow this game down. I mean, they knew the defense is not holding them, and so you had to go match. You had to go touchdown for touchdown, and then they can't do that. So they needed it. They had a couple big wins prior. Take a loss. It's not terrible. See if they can come back against the Cowboys. Was thinking about going to that game because it's only a couple hours away, but I don't know if I want to be going to Dallas as an Eagles fan right now. Personally, I probably won't want to do that. But that said, thanks so much. I'll see you guys in the next one, probably on Wednesday. Peace. Have a great rest of your day.